In today's video, we're going to discuss, is real estate investing over? Is it no longer a viable investment opportunity? Before we get into the details, check out a little promo that we've created for our upcoming Well Investment Tour. This is coming up at the end of November. Here's a quick preview of what you can expect.
Just completed our Well Investment Tour. If you're interested in coming to our next investment tour, there's a link in the comments below. At these tours, we showcase 3 of the projects that our clients are currently working on, and we give a little package for everyone who comes, including the financials of the property, as well as the drawings. So you can see exactly the layout of these projects, and you get to see it in person, ask any questions, and sometimes our clients come out as well to share their perspective. Sign up now.
All right, so the link is in the comments below if you're interested in learning more information or if you want to sign up for our upcoming tour. So here are some things to consider when we think about this question, is real estate investing over? Currently, if interest rates have increased a lot and if they continue to increase and are sustained at these higher interest rates, real estate right now is overpriced, meaning prices will have to go down significantly further in order for real estate deals to start penciling in some cash flow. At current real estate prices with current interest rates, even though prices have come down, most deals are not having any significant positive cash flow. The second thing to consider is if interest rates don't stay as high as they are now, they may go up higher, but then if they start coming down, not necessarily as low as they were during the first 2 years of the pandemic, but even if they go down to say 3 or 4%, which is still on the higher end of what they have been for the past 1.5 decades, then real estate right now is on sale. Because if you buy a property at today's prices and interest rates go down to 3 or 4%, many of these deals will have significant positive cash flow. The third thing to consider is a little bit different. This is when it comes to rental inflation. So if inflation is high and interest rates stay high as a result, but if rents move up meaningfully because of inflation on a consistent basis, then real estate may be fairly priced even right now, because if rents can increase further, a break-even property now can become a low cash flow to a medium cash flow type of property over the next little while if inflation continues. So all 3 of these factors are going to have some impact on the future prospects of real estate investing. And here's the challenge. They don't have a clear answer. There's no clear answer which one is 100% right. And the real answer is going to be some combination of those 3. We don't know how much lower real estate will go because, again, it is dependent on how high interest rates go and how long they stay high. And we don't know, is inflation going to come down or is it going to stay at around where it is now? Is it going to increase? These are impossible things to predict accurately. One of the investors I follow closely is Peter Lynch. So he had one of the best investing track records in the 1970s. I think for over a decade, he had his mutual fund grew at something on the order of 29% compounded over a decade. So he is an incredible investor, and also he's very good at speaking. So if you watch some of his videos, he explains some of these concepts very clearly. One of the things he brought up is if you have the ability to predict interest rates 3 times in a row, and you start out with $10,000 and you invest that into interest rate options, you will become a billionaire. 3 interest rate moves, if you can predict them accurately in a row, you will become a billionaire. And the next thing he says is, I don't know of a single billionaire who became one from interest rate options. So for everyone that thinks they can predict interest rates, or for those of you who may be beating yourself up, thinking you screwed up because you have a variable rate mortgage like I have, instead of fixing in when interest rates were low, these are impossible to predict. Maybe the safer route would have been to take a 5-year fixed, and maybe we should have done that. Who knows? But to accurately predict these 3 times in a row is the level where you don't need to invest in real estate. You should be doing options on interest rate moves if that's something you can do. And like Peter Lynch says, he doesn't know a single billionaire who became that way by investing in interest rate options. So those are tough, important questions that don't have a clear answer. There are important questions that do have a clear answer. And some of these include, is there demand for real estate, rental real estate in Ontario, and real estate in general? Yes. Is there going to be more demand in the future or less? I think there's going to be more demand. Are rents going to be higher in the future than they are now? I believe so. Can I buy a property with a margin of safety? This is the tough question that is not clear that you can do it across the board. That's why as a team, the number of deals we're doing has come down significantly because our focus is to help our clients purchase properties that have a margin of safety. That comes in the form of positive cash flow. That comes in the form of, if it's a land severance deal where they can split the land, sell it, take some profits off the table, set it aside, even if the property doesn't necessarily have a huge positive cash flow, that money can fund that property, and it gives a margin of safety, meaning you can stay in the property, you can stay in the deal, you can hold it for a long enough period of time. So that is the one question. There can be a clear answer, but right now the answer is not a resounding yes. It depends on the deal. Some deals are a yes, but it's not across the board. The fifth question is, can I invest with a long-term time horizon? This is an important one. You have to consider your own financial situation, not just the finances of real estate and of the property you may be buying. Because if you buy a great property, it breaks even, it's a little positive cash flow, but then if values come down because interest rates go up and you don't have staying power, if you lose your job, if your income is severely affected and you're forced to sell that rental property, now that's a situation you can really lose money in real estate. So you need to have staying power, and with that, a long-term time horizon, so that if values come down in the next year, 2 years, you have the ability to wait 5 years or 10 years for your investment to be profitable. I personally think that real estate will perform well in the future in two different scenarios. If interest rates come down, I think it will do well. If interest rates stay high, it will likely be as a result of inflation. And if inflation is high, with these higher interest rates, real estate will come down, but there will come a bottoming out. There will come a time when it's gone down as low as it can go, after which I think we can expect reasonable price increases over the long term due to inflation. Because if the cost of labor to produce a house, the cost of building materials, the cost of land, if those things are increasing with inflation and increasing with the supply demand, where there's less supply and more demand for real estate, then over the long term we can expect appreciation. The question becomes, what is that bottom? And interest rates determine it, so we don't necessarily know, is that now, is that a year from now? But overall, I think the long-term picture for real estate remains good. If you own real estate right now, I've had more than a few clients ask me, should I sell? Should I get out while I can? And it goes back to those questions that there are a clear answer for. If you have a long-term time horizon, if you have staying power, and if you believe in the long-term of fundamentals of this region, that the population growth, the demand for housing is going to exist and increase over the next 5-10 years, and you have the ability to stay in the market for that period of time, now is not the time to sell. If it's a personal residence, you're selling a home and you're moving, sure, why not? You can sell at a lower price, you can also buy at a lower price, so it doesn't really affect your life too much. But if it's an investment decision, you don't need to sell, you're selling speculatively, hoping that you don't lose more money if property prices come down further, that is something I would avoid right now. So again, if you're interested in learning more about what we do, check out the link in the comments below to get more details about our Welland investment tour. At these tours, we will showcase a couple of the projects. We'll provide you, the drawings, the financials of these projects our clients have purchased, and give you a real insight into what you can expect working with us and what you can expect getting into real estate, whether it's now, whether it's 6 months, a year from now. I think these tours can be very valuable to just get a better understanding of what to expect. So link is in the comments below. Until next time, all the best.
just completed our Welland investment tour. If you're interested in coming to our next investment tour, there's a link in the comments below. At these tours, we showcase 3 of the projects that our clients are currently working on, and we give a little package for everyone who comes, including the financials of the property, as well as the drawings. So you can see exactly the layout of these projects, and you get to see it in person, ask any questions, and sometimes our clients come out as well to share their perspective. Sign up now.